We turn to Gina Sanchez for our trades today. She's Chantico Global CEO and a CNBC contributor. Gina, it's good to see you. So let's start with the one who's already reported, which is Lowe's. Do we learn anything? What's your take? What would you do with the stock here?
Honestly, we learned stuff that we already know, which is that consumer discretionary is starting to pull back, and Lowe's is feeling it. We already sort of saw that with Home Depot, so we knew that going into this, and so I don't think anybody's surprised by this. Lowe's is a cheaper trade to Home Depot, partially because they were, really doing a lot of catch-up during the pandemic, and quite frankly, the outlook for Lowe's is a little better. So comparatively speaking, it's a cheaper opportunity for a little better growth. So, the story is that the consumer is going to continue to pull back, and unfortunately, those DIY projects, you have to do the math. Are you willing to put the money in if we have higher interest rates? You're going to have a harder time selling your home. So I think a lot of people are doing that calculus, and Lowe's is feeling it. Yeah, for sure. Although the stock is hanging on to about a 2% gain today, it's still green year to date. Let's move on to Palo Alto Networks, which reports after the bell today. Their cybersecurity stock up 40% this year. People looking for commentary on billings growth, profitability, macro headwinds, AI. You're still bullish. And what has been driving this levitation lately? So, look, you are also seeing some slowdown there. We're bullish because we think there's a long secular story here. As use of the cloud grows and as that story grows, the need for cybersecurity is going to continue to grow. And one thing we know is we've already seen some of their competitors reporting, and they're showing that people are still spending on cybersecurity. This is really important, but you're also hearing from the company that, in fact, it's getting harder and harder to close sales. It's taking longer. They're getting shorter duration contracts. And so all of that is going to stack up to maybe a little slower growth, but from 40% a little slower is still a lot of growth. And so from what we see a long secular growth story here that we want to continue. It's expensive here. That's the one thing you have to remember. But look, they are continuing to do everything that you need. They're getting, they're continuing their government sales. They're continuing to get all of the certifications and requirements and recommendations that they need in order to do that. So the story has a durable element to it.
All right, then let's move on to the home builders. Talk some Toll Brothers, which is also out this afternoon, up nearly 30% this year, even though, well, maybe because of higher rates in a way. We're looking for updates on new home orders, weather issues on the West Coast, any more builder commentary, bullish builder commentary. Stocks down 1.5% today, up 27% this year. What do you do with that?
So, Toll Brothers is actually still cheap. This is an interesting one because, they had, they basically, a lot of people were throwing out a lot of the home builders because interest rates were going up. And so as interest rates were going up, the assumption was, well, it's going to be harder and harder to sell your home. And they were right. But there is still a massive shortage of houses. And so as we're starting to look past, the Fed finally starting to take the foot off the gas pedal, as it were, you're starting to see an increase in demand. You started to see it in January and February. That's continuing through. And so Toll Brothers just needs things to look a little less bad. Now, the debt ceiling talks are not doing anything to help that. So, that is something that you do have to watch with respect to interest rates. But as long as we get a little bit of better news out of the interest rate story, some stabilization, higher home prices are actually a good thing for Toll Brothers. And there's still a massive shortage. So the supply-demand dynamics are still in their favor. And we've forgotten that over the last year. And we're going to start to see that really start to ramp up as we go into at least a stabilizing interest rate market.
So you'd stick with the stock?
Yeah, absolutely.
All right. Home builders, too, hanging on to those gains. Gina, thanks. We appreciate it today.